Good afternoon, everybody, and welcome to another edition of Chart Watch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it is a pleasure to join you at lunchtime on a Wednesday to chat markets. And OMG, I think I said that last week, didn't I? But it is an OMG 2 weeks in a row kind of situation where markets are going absolutely crazy at the moment. Not just crazy up, crazy down. Today it happens to be the latter, not the former. Obviously, we're going to talk about all of this and much, much more after we do our portfolio management model. We might actually do a bit of a whip around the grounds, and I did that a couple of weeks ago. It was very, very popular. So maybe we'll just check out some of those key touch points: gold, silver, crude oil, of course, and maybe some of those global indices as well, just to kind of get the lay of the land of where things are currently headed. Then we'll do your requests, your favourite ASX stocks. It could be anything else you want me to look at. I'll give you my best technical analysis reader. And then, of course, if you are interested in getting my trend ribbons, if you don't know what they are, as you'll see in about, a few minutes, you're going to see they're pretty good at what they do. You can get access to those for free as well. Portfolio management model first. We'll kick off with Nasdaq Composite, which is a little bit ancient history, isn't it? And this is how quickly things are moving in markets. This was total disaster. The bad things are happening in the world. Let's sell all our stocks. Then we had, of course, the productive discussions are underway. Markets rallied, but we can see they're close substantially off their highs on that candle. I don't know if you caught my commentary in the evening wrap last night. In addition to, there was a massive bet placed on S&P 500 futures 14 minutes before the Trump announcement, Trump tweet or whatever it was, and then oil was shorted and S&P, who would have thunk it? Just very, very, very clever people, of course, are very lucky. And then the markets didn't believe it, of course. We sold off again last night. And then after market close, US time, of course, we've got this potential that there's some sort of ceasefire being put on the table. So we will say that last night's candle, which is moving in trend. I mean, this is exactly what we would expect. And this is exactly what we would expect. They are the MOTN candles, aren't they? For the scenario that preceded them it's all moot, and this is the world we live in, and that's okay too if you have adjusted your risk accordingly. So if you're still full risk position, of course it's a white knuckle ride. You are going up and down with every silly announcement that's made all over the place for what is ultimately a really horrible and disgustingly tragic situation. And here we are, looking at candles. So we should always try and pull things back to unfortunately what is happening in the world. But anyway, this is what our job is to do here on a Wednesday. My point is, if you've got your risk settings adjusted correctly, who cares about the volatility? I mean, you're just waiting for the next trend. And we're set here to 1/3 risk position, which even after today's rally, we don't really care. We've got some invested, we've got mainly cash. Are we worried that that's the bottom and we're going to go up and make an all-time high in the next 4 candles? Not really. I mean, if it happened, we could add some more risk back in. Do we believe it's going to happen? Probably not. Is there going to be some more bad news? Probably. It's just, ladies and gentlemen, don't be like everybody else, trying to read the news every day, reacting to headlines, trying to figure out what the experts are doing, trying to figure out what the politicians are doing. Just look at this. Ladies and gentlemen, please. Candlesticks, trends, price action. I know you've been reading my work over the last few weeks and probably months. I know you've been reading all the other stuff out there, and let me know. I don't know, thumbs up, thumbs down, whatever it is. Can you tell me, is there anybody else that's called it better than me? And not just this, is there anybody else that's called it better than me just for every other market crisis you've ever seen? Imagine, it all would have been the same things I would have said to you back then. Don't get your knickers in a knot. Just follow the price action and manage your risk every day. It's actually not that hard. Anyway, 1/3 risk position. I don't think we need to change. Let's head over to the ASX 200, where all of a sudden we've got this big white candle. And again, is it, I'm going to throw all my cash back in the market? Look, I don't think we need to right now, because there's still a bit of a train wreck going on here. But we will if need be. So what will need be? Let's say there is a ceasefire, and I don't even know what the right course of events would be for markets to repair themselves even. What does that look like? But let's say it occurs, whatever that might be. We'd need to see some evidence that the big money is buying the dip again. Okay, they are looking. So obviously we'll get a rally. I mean, if there's good news, we're going to get a rally. If bad news, we won't. We've got good news. What happens after the rally? I mean, it's great to get the rally, but what happens next? If the rally fades quickly, like other rallies have done, we know this one isn't the one. It won't have the legs. If the rally is supported on the next dip, so we want to see, I mean, we know there's supply in the market. We want to see that supply side challenge to the rally, okay? How much ammunition does the supply still have? And then how much ammunition is coming in from the demand side to meet that? And if the supply side says, you know what, I still want to get the hell out. I don't believe any of this stuff that's going on. I just want to de-risk. They're going to have way more ammunition than the demand that's coming in to buy the dip. We're going to make a lower peak to 86.54. It's going to happen with a big black candle or an upward pointing shadow. These two caterpillars here, the light pink caterpillar and the orange caterpillar, are going to stop the price from going up. How do they do that, ladies and gentlemen? I don't know how these caterpillars work. Do you? I don't know. They just do. So let's just let them do their jobs. And we will come back down again. Now, that's one scenario. The other scenario is the supply doesn't have it. There's just no supply anymore. It's like, well, things aren't that bad. Why am I selling? Why not hang on and hold out for more? HOFU, hold out for upside. Supply takes a breather. The demand is saying we're underweight. Like, we could be short because we thought stuff was going down, so we put on some shorts. The way you need to get out of your shorts is to buy back. You are part of demand. We could be underweight the index. If you're following my model, you're underweight the index. You've got 67% cash, and that is going to start to put a lot of pressure on you if the market starts to go up. So how does that element feel? Are they coming back into the market? What's their ammunition? And then you've got the traders that are buying all the time. Well, I shouldn't call them traders. You've got the passive fund managers. Money keeps rolling in because we keep getting paid 12%. Every week that we get paid, and they have to buy. So we're seeing how those three parties, the shorts, the underweights, and just the regular buyers respond. If there's enough ammunition, we'll see this higher trough here. That's what I'm talking about. We'll go up. We'll take out 86.54. We won't be printing black candles. We'll print white candles. The caterpillars will be meaningless. Okay, they will fail in the face of this demand. And when we start to see literally what I've drawn on screen, and I would say closing above the caterpillars, I don't expect you thought you'd tune in today and hear about caterpillars, but that's when I'm going to stay. Well, it's unconscionable for me now to stay at this underweight position. I need to start moving back towards neutral. And you know what? If I miss out a little bit, I miss out a little bit. My job is not to care about missing out a little bit. My job is to protect my capital in a way that makes me feel comfortable. And anyway, it's my model. It makes me feel comfortable. Hopefully you're starting to use it as well. You're starting to see how it works. And if you didn't use it this time, that's okay. All right. The good news is you know what it is. You can see that it works pretty well, probably better than what most other people are telling you. You'll use it next time. It'll be around next time. Don't worry, the caterpillars will be there. They'll be doing their work. Let's have a quick whip around. Well, actually, I was going to say let's have a whip around the grounds and have a look at some of the other charts. But like Russell 2000, like the Nasdaq, broad-based measure of smaller capitalization. So really, the coal face of US stocks actually looks half decent. I was going to say, no point now because the news is going to push these up tonight probably, but it's not where they start, it's where they finish, and that's really the message for the ASX 200 as well. We're up, but we need to stay up. Yesterday we were up, but we came back down. The market didn't believe it. If we stay up today, it means the market does believe what's happening, so we will take note of that. Actually, that doesn't look too bad. It's holding the caterpillar. I'll head over into Europe. We can see that there's been significant damage done in Europe, the French market, the German market over there, and the FTSE, although that is, you can see the old caterpillar is doing its work. Let's just quickly head over to Asia. And we can see also markets there in Hong Kong starting to break down. Nikkei still in long-term uptrend, but short-term downtrend. The message here is, are we seeing uncertainty or are we seeing certainty? We're seeing a lot of uncertainty here. And that should probably just temper our enthusiasm about jumping at every shadow, I guess, that is cast upon our markets. Having a look at maybe which sectors within the ASX 200 are doing better than others. Probably not that one on consumer discretionary. A couple of decent candles at the end there, but still too early for me. And we've talked about all the stuff that would need to occur before we start to get excited about some of these. And that one's not there yet. And I'm happy to wait until those things do occur. Energy is an interesting one. How would we tackle this if this was a stock price chart? The model. This is today's candle, so it's not closed, it's still going. Obviously, anything that's good for everything else is not good for energy, and that is the double-edged sword, isn't it? Not closed yet. If it was to close like that, it's starting to look a bit concerning. This is a very strong candle yesterday. Obviously, it's the opposite of everything else. And everything else before this is very, very strong too. But we do know at some stage, even the best trends are prone to reversal. I'll show you a chart that proves that in a second. So it's something that I guess we need to watch. I would not like to see this index close beneath that point there. Okay, this is where the demand came in yesterday. If we're closing beneath that point, what happened to that demand? It's been consumed by supply, and that's usually not a good sign. Would that require us to reduce risk at that point? Let me see the candle first. I know we're only going to chat next Wednesday, but I think you can apply the logic yourself. Banks, the big swing factor, holding the long-term trend ribbon there, neither here nor there, and that's actually okay. We prefer that one to not be looking bad, because if it does, then the old tin pot is in big trouble. Gold, and this is what we wanted to do here. And you can see there's some scratchings from the past. Let's delete all the scratchings from the past, because we've got people coming in new all the time. And I wanted to compare and contrast the energy chart, energy sector chart, with the gold sector chart, because where was the big trigger for the gold sell-off? And we can see, and I'm going to point to all the same things again. Actually, I don't like the dash line. Let's get rid of the dash line and let's go a red on this one. We can see, look, this candle here is much like the candle we're seeing today. I mean, are we seeing into the future of the energy sector right here? Because blend that together, it's getting worse, but holding the short-term uptrend ribbon. Okay, so where's the smoking gun? And this is showing it's not that easy sometimes to pick it. And for me, hopefully you agree, that's the smoking gun there. So this is the point where, again, I'll use that word, unconscionable. It's unconscionable to continue running full risk position on the gold sector. Now, obviously not trading the gold sector, but I'm using this as a proxy for, you might have wanted at that point to have checked the charts of all of your gold stocks. Is that fair to say? Because blend these candles together, we are almost species ending event. We're back beneath the short-term trend ribbon. We've come under that little bounce point there, and we've actually come under this last point of demand here. Okay, so at that point, we've got some real issues, and then it's just minus R's, minus R. It's all minus R's, isn't it, from there? So were we able to get out the top on this occasion? No, we weren't, because the signal wasn't strong enough, and that's going to happen from time to time, but we could have gotten out, I think, before a substantial amount of damage was done. So why did I talk about that? Because this is what the situation is here, and no doubt there are some of you out there that are probably holding some long positions in that energy sector. So not saying that's what's going to happen. I don't know, because I can't tell the future, but I'm trying to give you the tools to be able to do the analysis if and when that time comes. Healthcare for me, it's just a non-event at this stage, and we could be looking at the best buying opportunity in healthcare in the last 20 years, and I wouldn't have a clue, ladies and gentlemen, because I'm a trend follower, not a trend prognosticator, but when it turns, I'm happy to get onto it. Not there in technology. This is the other big one as well. So it's just about, again, doing that same analysis, and I think we've come to a conclusion here on a very similar day, which is that day there, and certainly that day there. And I would say on that day there, and this is because, let me get rid of those again, because I can leave them. What we're worried about at that point there is now the short-term trend ribbon behaving. It has gone from behaving as a zone of dynamic demand and doing a very, very good job of that to behaving as a zone of dynamic supply. And it's that candle there. On this candle, we don't know, because we're moving up into the range, and it's this candle we start to move back down again, okay? And it's a full black candle. We've got a lower peak now from here. So if we look at our points of supply, point of supply, okay, are the big fund managers buying this dip, or have they switched to selling the rally? And think about that for a second, what that means. The big fund managers have gone from buying the dip to selling the rally. Guess who's still buying the dip? Think about that for a second. Okay, the fund managers have switched to selling the rally, but somebody's still got to buy that dip so they can sell. Real estate bouncing today, obviously with what's going on, but not an area that is of major interest to me at this stage. Staples looks half decent. Defensive sector. Telecommunications is Telstra, but largely a non-event because it's been balanced out by more of those technology names. And utilities, of course, due to their inelasticity of demand for what they tend to produce, which is electricity and gas and things like that, that is also doing very well. Defensive sector indeed. So a bit of an overview of what's happening to complete our whip around the grounds, starting with silver, and then we'll do gold. But we have seen, lo and behold, silver really, I'd say there, bouncing off the long-term trend ribbon, but also here bouncing off the long-term trend ribbon, helped ultimately by President Trump's announcement a couple of nights ago. But I don't think it changes a whole lot. If you've been watching ChartWatch Live for any length of time, you know that literally on that candle there, I said to you, well, it's going to be very, very difficult for silver to come back from that. I think I used the words species-ending event and the words cycle high. Nothing's really occurred since then to convince me that that's not still the case. If anything, all of this has confirmed it. And you are going to find times, ladies and gentlemen, where we go through, this is the hottest thing ever, to the markets have just moved on. And unfortunately, average investors don't move on as quickly as the big fund managers do. And that works for the big fund managers because often they do still need liquidity coming in on the old narratives to exit their positions. But this is why we have the charts. Gold, it's going to turn out probably in a very similar fashion that was the species-ending event, but I didn't tell you that at that time because for me it wasn't sufficient at the time to be able to call it that. It largely held the short-term trend ribbon, and then it actually continued to push higher. And we said words along the lines of, look, still looks very strong, not sure yet, needs a bit more information, and actually that's probably the defining candle when you think about it. This is the point, I think, where this point of supply is really confirmed as being something important, and then we're just really looking for further signals that the supply side is in control of the market, like upward pointing shadows, like black candles, like any signs of lower peaks that might come in. Closing beneath the short-term trend ribbons. These are all things I've taught you. These aren't things that you need to, there's no guesswork required. You can see them very clearly on the chart. And again, saved ultimately, who would have thunk it, by the dark green caterpillar. So what does that mean for gold? Oh, look, I think we can bounce, but we've got problems here. Is this going to be a nice, clean, easy run like we had for the past 16 to 18 months? No, I don't think so. I think it just gets a bit moot, unfortunately, for traders who like to move on to the next shiny new plaything. No pun intended that time. High-grade copper seems to be holding the dark green caterpillar, or now it's orange. No major interest there from me. Iron ore looks pretty strong, actually. Because this is a China-centric theme, 99% of iron ore, it really depends on China. So that is less to do with the Middle East. And let's have a finish off here quickly by looking at Brent crude. And this is actually quite instructional as well because we do have clearly a lot of supply coming in around that 115. It was there, and these were heightened days of sensitivity to narratives. And despite the heightened sensitivity to those narratives, we know what those narratives are. We did close off those highs, and then we actually get some bad news for crude oil, which is good news for everyone else, of course. And we do get the large black candle. Is that a species-ending event? It's not bad. Look, it's not bad. It's probably a bit more like the gold one than the silver one, but I do think it will be hard to come back up and really challenge those levels. But we won't know until we see stuff like any challenges that are made are repelled. We start to break through short-term trend ribbons and things like that. And again, this is sort of reflecting back on how we might well want to manage some of our energy sector risk. Thermal coal prices, coke and coal prices still look largely intact, but they are slightly lagging indicators. So that is the whip around the grounds. Let us hopefully that was worth your while. Gave you a few extra insights into what's going on at the moment. Let's head back to the charts here, and we'll do some of your. Thank you for people who are acknowledging that. And we'll just do a couple of offline requests first. We've got Sydney, and I'll start by saying, look, if we were scanning through a list of opportunities to add risk, because many of you have cash like me and are more than happy to add risk to the long side if the right opportunity presents itself, we wouldn't spend very long on this chart, would we? It's not a train wreck of a chart. There's lots of good things happening, but if it was in a list of, say, 200 stocks, maybe the ASX 200 that we were scanning through each day to find trading opportunities, we wouldn't spend more than about a second on this one. Now, when would we spend more than a second on it? Well, if it sort of looked a bit like that, we would entertain adding risk on a day like that, because we've got beautiful double greens, expanding moving averages, you know, our trend ribbons spreading apart. Everything's doing exactly what we would like to see. Price action is good, candles generally demand side in nature, and that's when we spend some time on it. We wouldn't spend any time on it today, but Sydney's asked me about it, so I obviously must therefore spend some time on it. But framing this in terms of our three possibilities here, which is to add risk, to maintain risk if we were an owner, or to reduce risk, I guess, also if we're an owner, we would immediately remove this option from the table on the basis that the trends, the price action, the candles are not strong enough to advocate that. Are we at equals R? I think we can get to equals R. It's not, as I said, it's not a train wreck. We still have, I know it's under pressure, but a short-term uptrend. We still have a long-term uptrend. The candles aren't awful. However, the price action is starting to become a little concerning. Let me draw in, we don't have to do it all, but just enough to get a rough idea. You can see some stagnation here as we got back to an old point of supply, not unusual. A lot of stagnation. I mean, that's a little off-putting as well, because we'd like to see nice, clean price action, and here we are today and don't know where that next one's going. So technically rising peaks and still rising troughs, actually. Again, I've used this over and over again. It's not terrible. I think we can get to equals R on this one. But if our job also is to find the best of the best, you know, and there's something else that it's got our attention, maybe that's the grip on that's a little bit tenuous. I think we can, fortunately, remove this option off the table, but we should always know where our exit is. I wouldn't like it to close under there. I don't think that would be constructive. I certainly wouldn't like it to close under there, and I definitely wouldn't like it to close under there. But by then, for me, you know me, I'm a shorter term trader. I want to have my capital working as hard as it can all the time. It's very unlikely that coal would still be in it all the way down here. And we can stage our exits. We don't have to be all out at once. If we're unsure, you know, we could definitely do a minus R there. We could do a minus R there. Look, we're going to be beneath the short-term trend ribbon for me as well. So plus there's a few big black candles in the screen. You know, I like to go and just pure template here, ladies and gentlemen. Don't read too much into this, but you know, this is how I like to move from a full risk position once I've achieved that. And then if I have to, I just like to retain that option sometimes to leave that cheeky last little bit in, but sometimes that last one will be 400. So this is what we're talking about. But you know, you can see that there'll be a cluster of them in and around this level, particularly if there's a big black candle, low close, it's going to go. So we've established whether we want to add risk to this, can we still hold it? And I think most importantly, where we wouldn't want to hold it. I mean, what else is there to know about CBA? Oh, coal, it's got a great dividend yield, or its earnings are growing. I actually couldn't care less. I can't express to you how little I care about those factors. When could we add risk to it? Well, clearly, I mean, if there's a lot of supply up here, ladies and gentlemen. Is that fair to say? We're all on the same page that there is an almighty amount of latent supply up here. So what would it mean? What would it tell you about the motivation of the big fund managers if we were to trade at 181? If we were to close at 181 with a nice candle, there are billions and billions of dollars trying to buy CBA, and the billions and billions of dollars who are trying to sell it, they're out of the market now. I mean, that would be spectacular, if anything. I mean, if that occurred, the ASX 200 is probably making a new high. That's how important this stock is. But we're not there yet, but something to keep an eye on, I think. Now, to actually answer Sydney's question, that's the technical analysis that I do as standard for you here on Wednesdays. But I should also answer Sydney's question, which is, how likely is CBA to reach its all-time high and beyond again? How likely is CBA to reach its all-time high and beyond again? And Sydney, my honest answer is, I don't know, mate. I wouldn't have a clue. I wouldn't have the faintest mate because I can't tell you the future. But what I can do for you is the analysis I just did for you. Okay, Peter's got, would you please advise what term is best for use of the trend ribbons? Very good question. Clearly the ribbons can look at very different timeframes, 1 week, up to 1 year or whatever. Do you typically use a week for short-term trading and a year for longer-term buyers? Well, you're pretty close to the answer there, Peter. It's something we have talked about before, and I know if you've heard this answer, you go, oh, Carl, I know this one. Okay, but lots of people come on board, they haven't heard it. So they're my trend ribbons. I made them, and I'm a short-term trader. I mean, there's no other way to describe it. I'm usually in and out within, anything between sort of 6 days to 6 weeks. It could be less if it's a bad trade, or not a bad trade, a good trade, but if it hasn't gone my way, if the trend didn't continue. It could be longer if the trend continues on and on and on, which is wonderful. So I don't know what my time frame is going to be when I get into a trade. It is what it ends up being based upon the signals that I get subsequent to that. Okay, but I am a shorter term trader. I like to use a daily chart. Okay, because a daily chart suits what I'm trying to achieve, my time frame of holding. Okay, some people don't like to do what I do because they feel it's too short term. They feel like they're getting in and out too often. They want something a bit slower. Okay, no problem. So short answer is, if you're shorter term like me, daily chart is perfect. That's what I use. If you're a bit longer term, just change that to a W. That's all you need to do. And now potentially this is starting to work for your self-managed super fund. Okay, we can see the trends all still work. We can see the short-term trend ribbon somehow, miraculously, still does a pretty good job of acting as a zone of dynamic demand, and the long-term trend ribbon somehow, miraculously, and we just changed the periodicity. Everything we compressed all those 5 of those days into a week, and yet everything still works. Isn't that wonderful? That's why I use them. Okay. So the only difference between these two periodicities is you're checking the market once a day on a daily chart for a shorter term trader, and for a longer term trader, investor, whatever you want to call yourself, you're checking it once a week, preferably at the end of the week. Hey, if you check it on Wednesday, it's not the end of the world. As long as you check it every Wednesday, you're consistent with it. Don't check it 1 week on Wednesday, or next week on Friday, next week on Tuesday. Do it consistently. I prefer at the end of the week because the candle's closed. I know actually what fund managers were thinking by the end of that week. And everything else in the model is identical. So we just formed our analysis for a shorter term trader, but for a longer term investor, well, we can see straight away some really strong signals here. Like if you blend those two candles together, what do you get? You get one almighty supply side candle, which, looking at the volatility on those days, and certainly elevated volume on the down day, that would have you questioning. And if you didn't do it, I'm not saying you would have done it after that one, but it would have got your attention. You would have had you saying, look, I need to be super attentive now to confirmation that the supply side is in control. Because, ladies and gentlemen, what this candle represents, the rising in line with the trend, but then the sudden influx of excess supply. And that's the only thing that can cause that upward pointing shadow, is excess of supply, more supply than demand. That is the supply side. That's the fingerprints of the supply side coming in to take control. Now, they didn't get control by the end of that day, that week. It's not a day, is it? It's a whole week, ladies and gentlemen. They didn't get control by the end of that week, but it looked like they got control in that week. Okay, now, hey, 2 candles does not the end of the bull market make. So let us look for some confirmation of that. And I think people who know the model have already got it. They're going, yep, I can see where you're going with this, Carl. If I didn't do minus R after that candle, 100% I did it on that candle, mate. That is a minus R event. So is that one. Yep. And then maybe I held on, but then I'm out here. I can't, again, it's unconscionable to entertain after that. So let's say you got out a bit here, Well, unfortunately, got about it there. We didn't get the top of the Commonwealth Bank run, but we still did pretty well, didn't we? And right now, what are we doing? This is a strong buy signal, so that's very impressive. You can see the point of supply in here. So this is obviously what we're grappling with now. Let's extend that across. Okay, so no surprises there. And that's pretty good. That's the supply coming in. That's a bouncing off the short-term trend ribbon. The short-term trend ribbon has gone from behaving as a zone of supply, of dynamic supply to dynamic demand. This is good, actually. This is starting to look good again. Oh, what's up here? What does that shadow tell you, right? Supply. And what have we got next? Okay, that's where we are. I mean, surely this is now just completely done obvious as to what we need to do here. And it comes back to what we see, the conclusion we had in the daily chart, that close of 181 or 180 better, this is going to start to look very, very good again. This is a key point. Wouldn't want to see it get beneath that because it's beneath this short-term trend ribbon on the weekly chart, but beneath here. Similar conclusions, but we're just, where do I add risk? Where do I take risk off the table? Where do I add risk? Where do I take risk off the table? And some people might be saying, well, you shouldn't have got out here because it went back up. Oh, well, I don't know the future. That all I know is the statistical probabilities associated with a candle that looks like that. Okay, and not just the candle, because we had black candles before, but they didn't really kill the trend. This one is a proper one to consider. So again, it's just about being consistent with the model. Hopefully that answers your question, Peter. So Amcor was starting to look good for a brief moment here, and there it's setting up as a turnaround setup. Ideally, we want to see it sort of come back, hold the long-term trend ribbon. And of course, we're turning around from downtrend to uptrend, and it did. And somewhere around here, we could have been entertaining, even adding risk on it around there. Okay, and we weren't to know that in about 3 or 4 days from that point, or even that point, that the US was going to invade Iran, and things were going to get very, very tricky for a company like Amcor. When you think about how much energy costs are a huge factor on their profitability. So anyway, stuff happens. Didn't work out, but that would have been an area where we could have been considering it for a turnaround setup, but it didn't happen. What happened? Back to the trend ribbons. Did the trend ribbons hold? No. Big black candle. Gap beneath is never a good sign. Can we get back? No. It just did not pass go. Did not collect $200. Yep. A real victim of circumstance, unfortunately. So it happened pretty quickly. I think really, if you owned Amcor at the time, I know it's easy to say, well, you can't beat yourself up because you couldn't, see it coming. But once you got to here, is it fair to say it's really hard to question why you still kind of got risk on it at that point? That's my view. What can we do with it now? That's down. That's down. So if we move back to our plus R equals R minus R spectrum, I can immediately rule out this. Carl, what if all of a sudden Americans, Iranians are hugging each other, there's peace in the Middle East, Iran never seeks to have a nuclear program again. They start being really kind to the people in the country, and nobody ever, in Israel and Iran, they start hugging. It's all good. Everybody loves each other in the Middle East, and there's never any problems again. Okay, well, hey, anything's possible. I can't tell the future. That's the first thing I'd say. But I'd say let's focus on what we can see and what the fund managers are thinking right now, okay? Because they're thinking about those things as well. And it'll be a sell in their spreadsheet. They will have a best case scenario sell in their spreadsheet and a probability associated with that, and times by, and they get a valuation for Amcor, whether that's $60, $70, $80 or $40 or $30, right? And enough of those fund managers start to make the right adjustments in the right cells And their view of Amcor starts to rise from probably now $40 to $50. Well, and it goes sideways. To $60 it goes up. To $70 it goes up real quick. Right? Ultimately, this is how funds flow. Right now, I put to you that they know everything. They've done the work. And yes, they've started to buy some back. Yes, the events that are occurring right now are changing the way they're viewing the valuation of Amcor. But there's still plenty of work to be done. This is going to be an issue for me. What happens here? Do we bounce off it? Do we get through it? There's too many unknowns. Okay. The point I'm trying to make here is I can't get to here. This is why I can't get to here. I can see there's a bounce, but I don't even have the most basic seed genesis of an uptrend, which is we go up, and in fact, this is the takeaway point for today, and hopefully there's one each week, is the importance of this bit here, right? So when we're recovering, so we're in this mode here, right? So we've been absolutely belted. This part now becomes absolutely critical in helping you determine whether this is an MOTN or actually that's still where we're going, okay? The old supply side challenge into demand side challenge, okay? So who's been in control up to this point, right? We've got total, utter, supply side control. Is that fair to say? And let's change the color of that because it's hard to read. Then we have a rally. Why? Because events facilitate that. How does the supply side now respond to that? What have they got? Because there's still supply out there, right? Then we want to see how the demand side responds to that challenge. Okay, and we will know. We'll see very clearly if the price does this, guess who's in control? But if instead the price does this and takes out this area here, okay, we are seeing a diminishment of that supply. We are seeing less motivation to want to supply. We're seeing more motivation to demand. And once the market psychology changes, we can see it move pretty quickly because people start to realize, the low's in. Okay, but without this little supply side challenge, demand side challenge, I believe if you have not seen that yet, you're basically gambling. I mean, you are just gambling on that being the low. Is that fair to say? Can I get some response to that? Because I reckon the people listening have done a few investments in the past, and if I'm going to go out on a limb here, but I'm going to say you've picked a few bottoms in your time, haven't you? You've tried to buy the dip, and you've tried to get that thing real cheap before, and sometimes it hasn't worked out the way you think. And yes, maybe you did it before the supply side, demand side challenge, and now can I get a show of thumbs of people who wished they knew about that before they did all those other ones, because it probably would have saved them a lot of heartache. Right, and we're getting, okay, so we're not asking for a lot. Is that fair to say? Stephen's asked me this question. Now, even if we saw something like this, even if we saw, it doesn't have to be a big dink. We just want to see what ammunition the supply still has, right? Now, for some people, that's enough. They'll go, bang, aggressive, I'm in. And I guess there's a segment of listeners who will think that's not aggressive, that's just, buying quality on sale. And it's just the way people think. Like fundamental analysts will think that's a really safe place to buy. Or fundamental analysts will think 54 is a safe place to buy because they think it's cheap, whatever, right? But even somebody who waited for that supply side, demand side challenge, that's for me, I still say no, it's still very risky because I don't have anything else. That's all I've got. I mean, for me, it's weight of evidence. There's so much I want to see. But there's potential there for an aggressive entry. Now, it's not that crazy when you think about it, because what we have for these types of aggressive entries is a very tight stop loss, right? We know where our exit point is. We talked so many times about James Bond in the casino, haven't we? So if you were to see the dink And let's say you get in at where this green box is going to go, right? So let's say you got in right here. That's your entry point. Well, we know what a downside is, right? We know that beneath that level, if we do trade beneath there, you know enough now that you're not going to hold on all the way down. But I mean, let's face it, that's what most people do, right? They try and buy the bargain. Just indulge me here and let me go to this one. They try and buy the bargain. Look at all this stuff we've got going. I don't want to delete this here because we've got some really good work here. But they try and buy the bargain. They don't wait for the supply side, demand side challenge, and then they regret it, and they regret it, and they regret it. But even when it falters and gets beneath that low, they don't get out, do they? They just hold on and hope eventually it goes back up again. But isn't it wonderful that we can look at something like this now and say, well, I understand the risks that are attached to this aggressive type of entry, but I'm prepared to take that risk on the basis that I know, like James Bond, where that exit is if it doesn't go right. Because if we crack beneath that last low, the MOTN becomes this thing's cactus. I'm not going to go down with the ship. I'm happy to take a punt here, but I'm not going to go down with the ship. Super interesting case study, Stephen. Can we have Newmont? Yes, we can have Newmont. Of course we can. Look at that. The old caterpillar, hey, is doing its job. So we obviously have the long-term uptrend ribbon. Somehow, just doing its thing. We don't know why. We don't care why. Do you care why? I hope not. I hope you've actually come over to that way of thinking of just actually not even caring why these ribbons do their job and just being glad that they do. Let's quickly run through. So this is not good. This is actually still good. We're actually okay here. I mean, this is a strong demand side push out of that ribbon. Let's go through the checklist. You should be doing this on every stock that you either own or you're considering owning, ladies and gentlemen. Trends, price action, candles, if there's any information from volume as well. Supply, demand, points of supply, points of demand, places where we need to be concerned and watch for price action signals. Okay, I think there'll be supply before that though. So if we look at this area here, I think now this is a bit of a problem, okay? And the reason for that is we know that historical points of demand tend to act as future points of supply, not all the time, but we'll know when we get there with the candles. And we're actually getting pretty close to that now. Today's candle, if it closes there, it's still live, would tell us that we're not feeling much supply in and around that level just yet, okay? What I wouldn't want to see, Doug, is something that looked like this, and it'll make sense now, okay? Visualize that. Just think about what that would mean. So today's candle closes the way it looks today, and then we saw this big upward pointing shadow into an area we know where there might be latent supply, and then a close on the bottom. What sort of an environment are we in? Are we in a shoot back up and make a new all-time high market? Or just visualize, you've looked at enough charts now to know how this works. Come back down, challenge the long-term trend ribbon again, maybe break it, I don't know. Or challenge the long-term trend ribbon again, find, there's our supply side challenge, demand side confirmation. Find this, rising demand, increasing demand, diminishing supply. I don't know. We don't know yet, okay? But what I'm saying is this area here is going to be absolutely critical. I need a couple more candles before I can make a strong call. But what I can say based upon what I can see right now is if we would move into our spectrum, well, I wouldn't be in this right now. You can see probably around about, and this turned quickly, but probably this day here or this day here. Hard to say without actually being there, but beneath the short-term trend ribbon, gap down. Okay, so this looks like a white candle, but it's actually a black candle. This looks like a white candle, but it's actually a black candle. Hey, Carl, what the hell are you talking about? They're white candles, mate. No, you've got to put the gap back into it. Okay, you've got to put the gap back in there. This is black. The gap is black. So they are disturbing, and that point of supply confirming here. Point of supply. We would have been in trouble here, starting to de-risk there. I'm going to say close to zero risk position here, if not zero risk position, and unequivocally out here. And the reason why I'm saying that is not to look like a smarty pants, but because we need to understand where I am in this spectrum. So I wouldn't own it, right? But if I put myself in your shoes, it's still too early for this. I can't be sure yet. I want to see the supply challenge, demand challenge come out the right way, like I've shown you here. Okay. I don't think I'm here because I think there's enough evidence that there's a bit of demand coming in. I want to see what happens here first. Okay, so I guess that leaves me with a very nervous equals R at this stage. And that is only on the basis that if I had it, but I wouldn't. Let's go MQG. Oh, gosh, I don't know what to make. This is an odd one, isn't it? This is an odd ball. And you can see here, actually, Macquarie hasn't really gone anywhere. Is it fair to say this is May last year? Let me find March 25. That's the 25th of March last year. It closed at $204.07. And today it's going to close at, let's call it $204.07. I know it's paid 2 dividends in between. That's interesting in itself, isn't it? Stock that's blue chip stock that's really gone nowhere. The point of that is that if there's no trend, what does a trend follower do? This is down. The price action is all over the shop. And I think it comes back down to, where are we putting our risk? Are we putting our risk in blue chip stocks? Or are we putting our risk in excellent trends that have great probabilities associated with them? It's very sideways. Look, this is a very strong candle today. The candle's not closed. Where could it go? Even if it, like that's an issue, what does it do there? I mean, it's got to do that. And even if it does that, then you can see we've got issues up here as well. In this spectrum here, and again, this is one that I could not possibly own. Where are we? Bloody hell. Lots of ums, lots of ahs. Clearly, beneath there, we're in some serious, what. Okay, so under here, I think for me, unequivocally, I'm ZRP. I know that. Again, so if we're going to get to this point where I'm going to concede this, is that fair to say? You kind of know where I'm going already. You know I'm going to concede this. You know I'm going to knock this out because there's no way I would buy this here. There's let's just go zoom normal. Again, if we were scanning through a list of stocks, this would not even get 0.1 of a second. I'd be past it so quickly. But I understand people are in this stock. So I must take that off the table, and I think I can eliminate this for now, but point you to there. Is that fair to say? So we can go equals R, but we would watch very carefully, much like the last one, the signals here. You see a bunch of black candles here, a bunch of candles with long upward pointing shadows. I would put to you, we're not probably going to do this. We're probably going to bounce back down off it, and that would be problematic. And sometimes it's easy to do this analysis. Other times, based upon market conditions, it can be a bit more difficult. SKS is a little bit more in the sideways basket as well, isn't it? Short-term trend is indeterminate, I would say at this stage. Long-term trend is still up, and lo and behold, the long-term uptrend ribbon is doing its job, thankfully, and it's keeping this one above water. But it also gives us, I feel, a really great place to peg what are you going to do about it? Okay, I mean, if we were to close beneath that level there and let us pretend, we don't know what the candle's going to be, but just so you can visualize. And I'd love you to draw these types of candles on the charts of the stocks in your portfolio, just to visualize, just to say, well, if I was presented with that situation, what would I do? So that if you are presented with that situation, the impediment to acting, remember, I can't believe I haven't even talked about this today. Have I not talked about analyze, accept, and act? And this is where I'm going to bring it in, because draw these types of candles on your charts to help you visualize your exit, right? So that when you see it, the impediment to this thing has gone. There's no impediment to this, because we all know how easy it is to do this. I've taught you this, right? I've taught you that. You can do that, all right? This is the tricky bit. Acting is a tricky bit because we need to get past the accept part, okay? And I feel this visualizing your positions in this way will help you with the accept part, because we know that under here, is it fair to say that, you know, that's a ZRP proposition, right? Until then, well, what can we do? I mean, we're not there yet. I think we can entertain the equals R. We know plus R's off the table. Why is plus R off the table? Because the price action's shot. Okay, the price action is not good. Okay, we're all the way down here where we shouldn't be. You know, we've taken out these points of supply. Okay, we've got other substantial points of supply that we are going to have to deal with at some stage. And I want you to think about what kind of market is going to be required to allow us to deal with those points of supply. Number one, we've got to deal with them, but you know, how are we going to get enough positivity to make that happen? It's starting to feel like a bit of a losing battle. Once again, it's not a stock that I could own because I'd have to be out of it already. I can see a path to equals R, and I've told you where my minus R is. Okay, technology one. We have got some properly difficult charts to analyze this week. It is a function of what the market's doing. And there's an old saying, isn't it? If in doubt, ... You know what how the rest of that goes. Technology one is half decent. Let us do the work. And that's what we have to do on every chart. And if I'm not around, guess what you're going to do? You're going to do the work as well. You're going to get these tools out. You're going to start drawing in peaks and troughs. If you don't know how to draw them, there is a previous video where I go into infinitesimally finite detail on how to draw these things. Price action's not terrible. A little bit like, you know, these two troughs took out that trough. Like, where's the demand? Like, it should have been holding in there. Look, fortunately, the short-term trend ribbon is doing its job. Now, the big elephant in the room is clearly the long-term trend ribbon. And I do believe we're actually starting to feel some of the impacts of that long-term trend ribbon right now. And it's absurd to say. It's so silly to say that. The long-term trend ribbon is making the price go down. The long-term trend ribbon can't do anything. It's imaginary. It doesn't exist in space and time, ladies and gentlemen. Never forget that my trend ribbons are a pure work of my imagination, okay? I know they're maths, but ultimately, nobody else knows they exist. If they just work, that's fine. Now, imaginary caterpillars. I went to this, watched this guy on YouTube the other day, and he talked about these imaginary caterpillars and my portfolio. And it's not all lost here. We've still got this, right? We're still hanging on to that. You can almost feel from my pause, right? Almost, what's the point? Like, we've got to get through this. Now, if we get through that, different kettle of fish. I'm on your side. I'm back in the picture here for adding risk. But I think we've just got to be sure of that first. If we look back, you know, what we do like to see on these big turnarounds, because ultimately that's what we're trying to predict here, is, you know, is that the big low? We do like to see an influx of volume and volatility around the low. And if we look at this area here, okay, we can see a bit of volatility. We can see actually a bit of volume. That's encouraging. I don't mind if volume tails away a little bit, but then there's another little push in the volume that comes with the demand side coming in. And I don't mind that. I'm seeing a couple of candles and volume patterns that are consistent. The reason why we want to see the big price action move, and it can be big price action down, it doesn't have to be big price action up. Big price action down on big volume, followed by a reversal, means that the shorts are covering back. Okay, so you need the shorts to stop attacking your stock. If the shorts are going to keep shorting, you are, let's face it, you're doomed. They win the battle most of the time. Okay, so the first step in one of these big turnarounds, and we're talking about something like this, and you don't think that big fund managers are shorting CSL, they're shorting the hell out of this thing. Oh, but my broker told me to buy it because it's good value. Okay, well, your broker's not in that group of big fund managers that are shorting the hell out of this thing. Now, you need those shorts out. To get the shorts out, they need to be buying back. So we want to see that big final push to a point, probably in value, possibly, and sometimes it does work out like this, ladies and gentlemen. You go do the research, look at charts at a round number that the shorts were thinking they want to cover back at. Okay, they shorted it at 40. Make no mistake, they shorted it at 40. They want to get 20. Right. So that activity, we want to see it in the volume. And then we want to see on any pullbacks, they're still going. They're still going. Now, I'm not calling the low of T&E. I'm just saying that some of these patterns I'm seeing are consistent with a meaningful low being put in. The price action, moving back to peaks and troughs. Ladies and gentlemen, what was our theme of the day? The supply side challenge, the demand side response. Okay, waiting at least, if you're going to try and pick the bottom, and probably what I've told you now is more valuable. This little technique is more valuable than 99% of other stuff you're going to see on YouTube, please. Even if it is only before you try and pick the bottom on something, wait for that. Try and get this stuff in there as well for your first lot. And you don't have to get all in when you're trying to pick the bottom. Don't go, I've got 20 grand to try and pick the bottom of T&E, bang, 20 grand in. That's it, I nailed it. All right? It's at $15, it's at $10. Oh no, what have I done? You know, hypothetically speaking, you got 20 grand, why not put in 5 to try and just have a feel of it, pick the bottom after this candle here, And then it gets above the trend ribbon. Wonderful. It comes back, tests and holds it, put another 5 grand in. Then the trend ribbon turns green, we hold it again, put another 5 grand in. Right? Closes above the long-term trend ribbon. Put your final 5 grand in. I'm not telling you what to do. I'm just saying there's better ways to do what you're probably already doing. I better get to the end of this and the end of the webinar pretty soon. Otherwise, we'll be here all day. And hopefully you agree that Chart Watch Live is not about getting through as many stocks as possible. It's about learning how to invest with a risk-focused mindset. Is that fair to say? Not even about trend following, because ultimately all the trends come down to is me writing those 3 R's on the screen at the end of the day. I'm not here yet, but I'm not that far away, right? And I could have even added some risk up to this point for all the reasons why I've discussed. I'm not here. So if you've got T&E, you're going, whew, Carl told me it's not crap anymore. That's a start. So we're here. And there's value. There's value in just being able to get to that point. Now, we don't know what's going to happen next. Tomorrow, it could be this, and we'll make our call. It could be this, and we'll make our call. Or it could be this. The energy sector, why don't we do that? I'm sure you're wondering, what do the charts say about Woodside, Santos, Karoon? Let's just get that in. Okay, it's frustrating because nice trends, don't get me wrong, nice trends, they've been in my watch list, you know that. But the situation is so volatile, we cannot believe that these trends will last forever. They're going to last as long as the next announcement. And I'll only burden you with this for 30 seconds, start counting. Last week, go watch last week's video if you're new. We talked about why the 1/3 risk level, our highest risk setting, which is only 1/3 risk, and that includes longs and shorts. We talked about why I've got to stop saying we. We talked about why I don't load up on shorts even if the trend has turned down. I am limited to that 1/3 because the volatility, even in bear markets, it is so extreme that you will find your longs get kicked and then your shorts get kicked the next day. And this is what we're saying. That was 30 seconds. I made good on my promise. This is what we're seeing. Now, I know Santos isn't a short on the market, but it might as well be, ladies and gentlemen, because it's going up for the same reason that's causing the market to go down. Okay, so we're seeing here, even in this chart, how longs get killed, shorts get killed, and that's why that 1/3 exists. 67% safe and secure in cash, cannot be touched. That's how I do it. You do it any way you want to do it. We've got some problems today. Today is a problem candle if it closes that way. Is this candle enough to do anything about it on that day? Would I have done anything? No. I could tell you, oh yes, that's the big black candle that would have got me out. No, that's rubbish. It's just not true. Can I say on that day that the supply side is in control of the price? Absolutely not. I wouldn't even look at that candle. It'd be inconsequential to me. Okay. What about this day here? A bit of supply still in the system, inconsequential to me. This candle's got my attention. All right, it's a big day. You know why it's got my attention? And this is not, oh, I wonder which candles get Carl's attention. Down here, ladies and gentlemen, it's got my attention. The OTR, it's like 2.5 times. Okay, you can use ATR 1. Okay, but I use OTR. I've made a few adjustments to Wells Wilder's tried and true formula. So that's why it's got my attention. Not because I'm guessing, but because this has gone through the roof. This has gone through the roof as well. We opened well down in the day. We tried to rally, and then we found some supply. So this is the day that's problematic. And it's not going to let me point to it, but you get the gist. But even then, it's not enough to act. Today's the act day. Is that fair to say? Like today, it's hard to give it any further room if it closes like that. But I'm not talking about selling all my Santos shares because of this and this. I cannot possibly even contemplate that. All I'm talking about is just for my own peace of mind doing a bit of that, okay? So that if there's peace in the Middle East, let's hope there's peace in the Middle East, and this occurs, I'm not going to feel like a total idiot for letting it get all the way back and going, oh, I knew I should have gone out of Santos. But I'm also not all out, so that if there's not peace in the Middle East, let's hope that that's not the actual outcome, and this goes back up, I'm not going to go, oh no, I sold all my Santos, I knew I shouldn't have got out. All right, let's go to Woodside. Let's keep moving. So nothing on Woodside until today. Today's the day. Today is a proper day that the volume's not finished yet, but I'm guessing this will be a decent volume day as well, but we know OTR off the charts. So today's the problem day. To the point where this is how I would do this, and you can do anything you want in the world, that if I saw that candle, because it's big and it's bad and it's ugly, and if it closes on the low, I would 10 minutes before the close, just a precautionary measure, just knock that. And that's all I would do, and then keep moving. I wouldn't care about it. I wouldn't be going, oh, maybe I should have sold more, or maybe I should have sold less. I have a set of rules. I follow my darn rules. Okay? Whatever happens tomorrow, happens tomorrow. I have no control over that, so why would I worry about it? Why would I care about what's going to happen tomorrow? I have no control over it. Karoon Energy. I don't have to talk anymore, do I, ladies and gentlemen? Let me just sit here in silence for 5 seconds. BPT. Oh, isn't technical analysis difficult? You know? Isn't it mumbo jumbo? Isn't it just reading tea leaves? Interesting. This is our sector review on energy, and we're not actually even talking. I'm trying to think of some other one. ALD. Some issues there. Maybe not as bad as Santos and Woodside, but still some issues there. And there's actually pairing that's impaired. So we've got two. We've got this one and this one in at the same level. There's a supply zone there. It's hit someone's level. VEA. Well, this one I had a problem on earlier. So this is the problem here. That's a proper supply event. Decent here and massive here. So this for me is speaking more to that, checking it at 10 to 4 and just going, yep, just for safety, right? Just that. Let's just do that. I can always get back in, right? Today actually doesn't look that bad, to be fair. This is actually probably the least worst out of all of them, even though that's the worst out of all of them. I can't think of any others. Forgive me if, let's do, okay. That's a problem. We don't have volume yet, but geez, that volume is going to be instructive today, isn't it? Today's a proper, must-watch candle for. Oh, look at that. That's interesting. Yep. Well, just do it with end there. Oops. Okay. All right. It's probably the first sector review that I've done in ChartWatch history where I said maybe 10 words, but I don't think I needed to say any more. And if you do want access to the trend ribbons, you can get them on TradingView. It's the only place I'm sharing them. I have lots and lots of people asking, can I have them on Metastock or Amy Broker or Optuma or Bull Charts and all these other things? And the answer I give them is the same: no. You can have them on TradingView because that's the only place I'm sharing them at this point in time, and they have a free account. Right, so there's a basic account you can open for free and view the trading ribbons on any stock, commodity, bond, crypto that you'd like. All I need is your TradingView username. There's a form to fill out. It's in the recording of any of our ChartWatch Live videos on the Market Index YouTube page. So fill out that form and send it to me. Please put your name in. Some people put in initials or just leave it blank. I don't give you access to my trend ribbons because I feel it's common courtesy that I get your name. Some people put in random things like their email address. No, I need your TradingView username. If you don't have a TradingView account, go get one first and send me your username. If you are watching on YouTube, be sure to hit the thumbs up button. I do get lots of thumbs up, and they don't go to waste, ladies and gentlemen. I absolutely, love seeing them. So hit the thumbs up button. Tell your friends. There's a share button as well. Forward it to anybody you know that's looking at the stock market at this point in time. And of course, hit the subscribe button as well. It has been an absolute pleasure chatting with you today. Apologies, as I always do at this point in time, for not covering more stocks, but hopefully there's plenty in there for you anyway. All the best for your trading and investing. Until we catch up again. Bye-bye for now.